Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Right now we see gold and silver in the red, by not by too much really. I mean, gold is down $12, silver's down 53 cents, hovering around that $14.17 range. But I also want to talk about the bullish side of silver, because there still is a lot of potential for things to turn around and for extremely high prices. This article is talking about how silver and gold are mirroring the 1999 and 2011 crashes again. Basically, this is both times these led to $50+ silver. And with that said, if the same thing is going to be happening this time around, to what extent? Because things are much more serious. The tables are playing much larger stakes. So if we can identify that, yes, this is a similar situation, which is going to lead to a huge skyrocketing price of gold and silver, what prices will those go to, or how high could it go? Back then, we weren't dealing with stuff like COVID-19. You know, we had a recession looming, which is happening this time, but now it's almost, the stakes are definitely much more serious. So with that said, make sure to smash the like button. Make sure you subscribe if you're new, because I do post daily videos. So, the gold to silver ratio chart from a new angle. This chart, the first chart, highlights the pattern we've identified and how we believe a similar pattern is setting up again in the current market. The setup of the pattern is explained in the text below, but quickly scroll down and look at the first chart in the pink shaded areas A to get an idea of what we were talking about. So, prior to the A pattern setup, after a moderate price decline in gold 1996 through 2001, a bottom sets up the price of gold and begins base near support. The gold to silver ratio, which is in blue, falls throughout this pattern setup as both gold and silver prices decline somewhat in unison. The setup A, gold prices begin to rally moderately while pushing gold-silver ratio higher over an extended period of time from 1999 to 2003, about 4 years. And right now we actually see the gold-to-silver ratio sitting around 114 to 1, so this is exactly the same thing that's happening right now. The gold-to-silver ratio peaks and begins to decline in mid-2003 as the price of gold continues to rally a bit more accelerated rate. Gold prices begin a parabolic upside price advance in early 2006 after the gold to silver ratio collapses about 18% to 20% of the peak from the near 82.5 level. We believe a similar type of pattern is setting up right now in the metals market, and we believe both gold and silver will engage in a price advance over the next 10+ months that may be similar to the post-A setup in mid-2003. Which also led to $50 silver. If you are familiar with what happened in the metals market at the time, silver began to advance at a faster rate than the price of gold advanced, which is lowering the gold to silver ratio, which this next part mentions, which caused the gold to silver ratio to begin to collapse. Because when the gold to silver ratio is going down, that means silver is outperforming gold. So you can see this happening right here. Almost identical. It's a mirror-like reflection. So the silver chart from 1993 to 2004 clearly shows how the price of silver was reacting throughout the setup prior to A and after A in the chart above. Silver began a moderate price advance in 1993 from a level near $3.50 and advanced to a level near $7.50 in 1998. Then it began the downside price move to reach new lows in 2002. At that point, markets changed. Gold and silver began to advance in almost unison, with gold still advancing slightly more than silver until the early mid-2003 level. So once silver broke dramatically higher in late 2003 to 2004, the gold to silver ratio started breaking downward instead of upward. This pattern we are seeing in the metals market right now. We believe that the recent rotation in the metals market and the dramatic price divergence between gold and silver are setting up another similar type of pattern that could prompt both gold and silver to rally upward from the current levels by at least 200%. And this is going to entail extremely high silver prices. I mean, 200% is nice, but I think it could go even higher, because this article isn't even explaining COVID-19 and what all this is entailing and how long this is going to last. The extremely deep price retracement on this monthly silver chart below highlights what we believe is a deep washout low price rotation, setting up the disconnect as we've tried to explain the gold to silver ratio chart and historical charts above. Yes, gold also moved dramatically lower over the past 2+ weeks, illustrating the shock to the market that took the place as COVID-19 virus event disrupted the U.S. global markets. But our research believed that this dramatic washout low in silver is setting up a much bigger pattern, a longer term than most people understand. And that's what I always talk about. Try to look at the bigger picture. Look at the bigger picture. A lot of people get stuck in these day-to-day prices, but gold and silver have a lot of potential much farther if you can step outside of yourself and look at the bigger picture. Look at things from a futuristic standpoint, and then you can see more realistically what's happening right now. So recently, news that global precious metal suppliers have received tremendous surge of orders for the physical stock over the past 2+ weeks. In fact, many global suppliers and mints are simply out of stock at the moment. This surge in demand changes the dynamics of the market and how we look at the washout low in silver. If demand continues to surge, which we have no reason to doubt at this stage of the COVID-19 virus event, and silver begins to rally as it did in 2002 through 2005, then the gold to silver ratio will begin to collapse just as it did in 2003 through 2007. This means the demand for metals is skyrocketing as silver has suddenly become a more in-demand physical metal than gold. So, the current gold weekly chart, we believe that the next phase of price action in gold is a move above $1,990 as demand for metals continues to surge. This would represent a 100% Fibonacci price expansion of the last price rally from the lows in September 2018, near $1,168. It would also represent a rally from the current level of at least 22.5% in gold. Subsequently, if silver begins to rally at a greater rate than gold over the same time span, silver could rally to levels above $22, representing a 53% price rally according to our adaptive Fibonacci price modeling system. So, even if it does that, we could still be seeing silver recover. So pay attention to the gold to silver ratio and the price of silver compared to gold over the next 30 to 60 days. If our research is correct, the current low price of silver will be a distant memory in less than 60 days, and a tandem price advance in both gold and silver will propel the metals much higher. How much higher? From 2003 into the 2011, gold rallied 450%. That from $350 to $1,900. Over that same time span, silver rallied 1,024%, from $4.50 to just under $50. If we are right about this pattern setup and the future opportunities it may present, we could see silver trading above $160 per ounce within 4 to 7 years. Can you guess where gold would be likely trading if silver rallied 1,000% from its current levels? Don't miss the next big move in metals. So, wow. That is definitely something that is possible. If you look at things from a realistic standpoint, things are happening exactly how they were back then, but times are more extreme. So are we going to see $160 silver? Is it possible? Silver is ranging in the long-term outlook. The metal found support at $11.60 on March 18th. Bulls defended the level, thus prevented further decrease in price. A Morningstar candle pattern emerged and bulls gained more pressure. This is noticed with the formation of more bullish candles, and the prices increased to test the former resistance levels of $14.30 after breaking to the $13.40 price level. The bulls lose momentum. Prices started a consolidation at the $14.30 level. So, this kind of goes over what silver prices are doing. I just want to kind of share this because it is important to stay up to date on a day-to-day basis as well. But I wanted to talk more about that $100 silver because right now, people are wondering who's going to be buying silver if it does get to $160. Well, I could tell you that many people will. The bulls in the industries will. People like you and I probably would, but the new investors, the new money would because they don't have any silver, but also the technological industry, the industrial side of things would. And why? Well, because they need silver. If you want the newest iPhone to come out, the PS5 to come out, you better hope that silver is still being bought up by these places because silver is needed. It's the most highly conductive metal for thermal conductivity and electricity. So people need it instead of just wanting it. It's a difference between wanting something and needing something. So anyways, I hope you enjoyed this video. Where do you think silver could go? Do you think $160 silver is impossible, and why? I would love to hear your thoughts, your theories, your insight, your knowledge. Also the link to these two articles will be in the description. Make sure you smash the like button. Let's try to get this video shared out there. People need to understand what's going on in the metals market right now, that this is almost an exact replica of what happened that led to $50 silver before, which is huge news. And I'm very excited. I'm very bullish on gold and silver. So anyways, thanks for tuning into this video. Make sure you smash the like button. This was Silver Slayer. I'll see you guys soon. Peace.